one of the things we've started to realize is the elasticity of supply and demand right now is the least that we've seen in any commodity environment ever, probably.
Our long-term forecasts are very positive on silver and positive on platinum.
We need to build the same amount of infrastructure in terms of grids, in terms of the grid that China built in the last bull cycle. We need to do 7 times that going forward here.
Ultimately, I think if there are disruptions in the nearer term, it just creates a larger reward in the longer term because that gap will need to close at some point.
So great, let's get straight to this morning. We're going to be taking you through several themes defining the industry at the moment, and looking at the associated risks and opportunities within investing across the spectrum of natural resources. So I'd like to call my panelists into the room, please, if they can hear me. Yep. So I have John Lamb from Orion Resources, Craig Parry from Inventor Capital, Nate Ebling from Osprey Asset Management, that should be, and James Steele, analyst at HSBC. So gentlemen, thanks very much for joining me and giving us your thoughts and time to start us off. Okay, so we've had significant dips in the market over the last month, sell-offs in tech stocks and other sectors being dragged down, the S&P being a little bit down at the moment, mining stocks suffering a little bit as well. Sensational period for metals prices. It feels like we're in something of a super cycle, although I'll hand that over to my panelists to confirm their views on where they think we actually are at the moment in the market. But, let's frame this outlook in this discussion at the moment. Is this a really positive time despite the global macro pressures? Is it a really positive time for metals and mining? Where are we in the cycle? John, why don't you start us off, please?
Thanks, Adam, and hopefully everybody can hear me. It sounds like it's coming through great. I think the market is in a very delicate point between obviously very positive long-term fundamental demand stories between electric vehicles and the intensity of metals use for those, as well as other energy transition related applications. Presenting a long-term, potentially super cycle-esque level of demand. However, in the near term, with uncertainty globally, there's a lot of uncertainty, pushing negative sentiment in the market, as well as higher interest rates and cost of capital that can impact these projects. Ultimately, I think if there are disruptions in the nearer term, it just creates a larger reward in the longer term because that gap will need to close at some point.
Just to add to that, how do you see the long period of underinvestment in our sector exacerbating the supply crunch on a lot of metals? You say it's good for the sector in the longer run, but how can some of the OEMs or some of the sort of downstream industrials obtain these metals that they're scrambling for at the moment?
I think you're starting to see it now, Adam. I think you're starting to see the OEMs become increasingly aware that the billions that they're spending on the research and development side and developing new products to address energy transition and create EVs for the economy. They do not have the same level of integration as they currently have with their traditional supply chains in providing those products. And as a result, they're having to go back to the business model of the auto industry 100 years ago, where they were investing in the upstream, securing supply to steel and aluminum to be able to build cars. I think some automakers are waking up to that. I think all of them need to be more serious about it. The challenge is there's fewer projects of high quality available today than there were. The challenges to building mines are significant, and the time that it takes for new supply to come online is a lot different than building a new factory, or even using the analogy with oil and gas, going out and doing oil and gas exploration. The timeline from discovery into production in mining is much longer and requires really a long-term mentality to be able to deliver that supply into the demand.
Yep, certainly. Okay, touched on some great things there that we can delve into a little bit later in the discussion. James, may I turn to you as the analyst here from HSBC? What's your take on some of the macro factors at the moment, and what are you paying most close attention to? Is it all doom and gloom, or are we at a really interesting inflection point?
When you said doom and gloom, you're not referring to my career, right, Adam? It's okay, or my marriage. Well, first of all, I want to thank you for inviting me, and the only comment I would make is some of us manly figures like John and me, we're going to require a bigger chair if we come back next year. But other than that, everything's been great. But as far as the macro events go, which have a heavy impact on metals, and I should preface this by saying that I am only covering the precious metals. We're very church and state in HSBC, and I'm not allowed to go too in depth on base metals or things outside of my purview. But as far as the precious metals are concerned, they are more sensitive, I think, in many ways, particularly the gold market, to macroeconomic issues, because gold is part currency and part commodity. And we're facing a very mixed bag. On the one hand, which is quite negative, we have the withdrawal of really unprecedented fiscal and monetary stimulus. I mean, that's very clear. The Fed have made that clear. They're ahead of other central banks. We're looking for at least 250 basis point increases at the next couple of Fed meetings, possibly more after that. And in addition, with the exception of military expenditure, we're at the end of many years of heavy government spending, and gold thrives on both debt and on low yields, low interest rates, and so those two things are being taken away. However, on the other hand, we have uncertainty, and on the geopolitical front, it's really quite severe, and likely not to be addressed at any particular time, at least in the near term. And you've only got to look at popularity of elected leaders, things of that nature, high food prices, high energy prices. All of these things are contributing to uncertainty. The activities in the equity markets globally, all of that is creating safe haven demand. So those two things sort of are, if you like, fighting for gold's soul right now. But we would have to say, on balance, the macroeconomic picture is, from prices where we are now for the next couple of years, probably more neutral than anything else. I think they're offsetting. But just to add on to some of the points that John made on the supply front, I mean, we do have, mining receives a very bad rap. And despite the vast improvements in the industry in my lifetime, mining companies are not replacing reserves as far as gold is concerned, and that's going to be an issue as we move into the decade. Silver, although we have significant mine increases over the next couple of years, we may see something more of that. And of course, we're limited in where we can get the PGMs. And although we know that more is going to come out of Russia in a couple of years, that's not going to be the case yet, nor is that with South Africa for the next little while. I'm talking on generalities here on the PGMs. So we are facing a tight situation on the supply side.
Yep. Excellent stuff. Now, Michael, could I turn to you? Sorry, I think we got the slide wrong with Craig's picture still up there. This is Michael Connett.
Yeah.
Yeah. So what's the view from Vancouver, and in terms of what you're doing with Inventor as well? How do you interpret these economic headwinds?
Okay. Well, first of all, thank you. Want to say thank you for having us here, Inventa, as a sponsor and as a attendee. Very thankful to be here. And Craig wishes he could attend, but he's stuck at home. But Inventa is a capital allocator in the sense that we invest our own money into commodities that we find, have a thematic concept or a path to the upside here. And so, we're quite interested in metals that are impacted by electrification. We have core investments in silver, copper, nickel, tin. And we also have investments in alternative energy and the green economy like carbon and hydrogen. So, our concept is to back strong management, tier one assets, and incubate them and grow the companies. So, we're not necessarily looking at cycles that are 6 months out, 12 months out. We're looking at cycles that are 10 years out. And we believe that we're just in the very early stages, the very basis here of the oncoming Super Bowl market here in metals. So, we personally remain very, very bullish on these metals, and a lot of the concepts for that, and a lot of the reasons that we are so bullish is exactly what James and John had mentioned here, is that there's supply erosion, there's demand increase. Particularly for copper, we were discussing this out front before, but the world's major mines in the copper space are getting deeper, they're getting lower grade, they're getting harder to mine, they're getting potentially nationalized in some countries. So, a lot of times, people look at deposits outside of these countries and say, oh, it's a little bit too difficult, a little bit too low grade. We look and we take a 10-year time frame view on these things, and we allocate capital in that sense here, and we believe that the demand for these assets will increase quite significantly going forward here. So our view is that although there are some difficult periods here, there's often this industry is extremely cyclical. We find opportunities in those cycles. When the capital markets, the equity capital markets are tougher, we tend to be a little bit more careful with our expenditures on exploration and development. But we wait for windows, and oftentimes there's opportunities to finance companies in certain windows. But at the same time, we identify projects and teams that are tier one, and we back them. Like Vizsla Silver, we're building very, very large, high grade silver mine in Mexico, and we believe that that's a financeable project in any market environment.
Excellent, very good. And Nate, could I bring you in here and get your take on what some of the panelists commented on, and also what's the view from Osprey at the moment? You're pretty bullish long run, despite these short-term hurdles and headwinds?
Yeah. I'd like to echo Adam. Thanks for having me on the panel. At Osprey, we invest across the spectrum in basic industries and commodities, everything from liquid equities and commodities to private stuff, and backing management teams at times. So I would say not too much different than Mike in some ways. We just try to be opportunistic on where we think things are going, and some of that's shorter term and some of that's longer term. But at the to answer the question, Adam, listen, I think it's not an easy time to make bold statements on the next few months right now. And listen, we all in some ways try to, and some of us get paid to do that at times, but it's with what's going on with the war right now, with what's going on with China right now, and are we going to come in and out of lockdown? Are we just coming out of lockdown and going to be done with it for their zero kind of COVID policy? What's going on with interest rates right now, inflation? I think it's a tough time to make really big calls here. I think to answer the original question, listen, we think we're in a secular bull market here. Now, that doesn't mean copper's not going to $8,000 before it goes to 12. But because of kind of all the facts that we made, I think you look at the fits and starts in some of the energy transition, and is lithium going to stay at 50 or 60,000? Probably not. It's one of the most abundant elements out there. But does lithium have a great story? And you have to find your points in time to be involved, and you can, back good management teams and top assets. Absolutely. So we're constructive. I think it's a tough time to say like, hey, just pile all in right here, right now. But I'd say, and when you take that, there's a few things that I'd kind of add in. When I look at it, one of the things we've started to realize is the elasticity of supply and demand right now is the least that we've seen in any commodity environment ever, probably. And why is that? And maybe it'll persist, maybe it won't. I think on the supply side, it will continue to persist. And for some of the reasons my friends on the panel have mentioned, it's hard to, the bar to actually bring a mine on and to develop it is a lot higher. And largely because of ESG reasons. Some of them are political. There's always political instability in different places rotating around. But you think about the permitting process today, you think about all of the people that, have input in the governments and how they've raised the bar. And, you think about what your end customers are demanding of, how you mine and what your products are. And it's a lot higher bar to bring supply on that, various constituents want. And then on the demand side, at least in the last couple of years, I think there's been a huge premium put on the actual security of supply, right? Because if I just don't have this widget, I can't make any more cars. So I'm going to take more widgets than I normally do, or chips or whichever copper wire harnesses, because any one of those pieces really throws a lot of disruption into my process. So, and I'm happy, I'm less price sensitive because I need to make sure my lines don't shut down, my manufacturing lines. And I think that's a big deal.
Excellent. Just on some of the points there, you mentioned the stop-start nature of the energy transition and a couple of reasons for it. And then ESG as well, you talked about. Is ESG putting the brakes on the energy transition? Is that a fair way to frame it in some instances? And then also, is the energy transition going to come as thick as fast as we expect, given the materials shortages in things like lithium?
Well, I actually think ESG is accelerating the energy transition generally, as opposed to putting the brakes on it. Now, people have made such big commitments to get where they are. And if you go to some of these conferences, the first slide is ESG, right? That the companies, if you go and listen to the Glencores of the world and the Freeports and the Rios, that's what they start with, is the ESG side of the whole thing. So I think the commitment is very high to ESG, and it's probably accelerating it in general. Now, to your point, and I think there's challenges in bringing production on that ESG slows it down in terms of that. So I think that ship has sailed, and we're going to continue living in a ESG, very ESG focused world.
Am I able to add to that?
Yeah, please.
I totally agree with what you said there. I think where there is a bit of a difference or disconnect, and I wouldn't necessarily refer to it as ESG, but I think there is a gap between people's understanding on a basic level of how this Tesla gets charged or how that solar panel works, and that hole in the ground in Arizona. I'm thinking particularly of Rosemont. You have ISR removal of copper in an area that's been a mining area. There's a community there, but it's very difficult now to get copper mines and large scale mines that have to do with electrification permitted and into operation. Certainly in someone's backyard in the lower 49. But I think that's really interesting because you see the rhetoric coming from the federal government, and of course I'm Canadian, so I don't have a dog in this fight really, but you look at the narrative coming from the governments around the world when it comes to we want to invest in ESG friendly metals, we want to invest in the electric revolution, but I think that's really important that it does start with permitting, and it starts with a view on how do we make this go forward in unison with the community and alignment with the community.
Absolutely. Please.
Just to maybe add on that, you have to be selective about how you look at this. I mean, I remember back in 2011, the silver market rallied to $50 an ounce, and it was propelled largely because of unrealistic expectations of solar power demand. We were getting figures of 100 to 120 million ounces of silver that would be consumed by the photovoltaic sector by this year, back then, or well before this, actually, within 5 years of 2011. And the market rallied up to $50. The solar power industry went to every effort to thrift silver. And now, for the same kilowatt in a silver panel, we use 80% less silver than we needed back in 2011. Now, I am bullish on the silver market, and I am bullish because of ESG. I am looking for solar power to continue to consume more and more, because frankly, I don't think you can thrift much more than where we are now. But I'm just using this as an example that the silver market came down very, very hard as the unrealistic expectations of what photovoltaic demand was going to do. So, I mean, I certainly agree on a broad issue, but you have to select the metal, and then you have to select where in the investment cycle and the product cycle you are. And, that leaves me with more silver and platinum than it does any of the other precious metals right now.
And maybe just to jump in here, and I think Jim, your thoughts there kind of echo what Nate was saying in terms of lithium and the opportunity, the tremendous opportunity there. Certainly some potential similarities. I think overall, ESG is a critical focus for miners and companies and across any industry. It is an area where mining companies, particularly on the environmental and social side, have had to engage with their communities for a lot longer time. So they're coming from a good place. There obviously have been a lot of negative incidents over time and corners cut, but I think there's an increasing focus on trying to advance and raise the bar. But the industry is coming from a strong part. I think ESG more broadly is certainly one of the themes that's underpinning the energy transition metals and demand therein. However, on the other hand, there seems to be a desire for everybody to be in the midstream of battery processing, taking raw materials and making battery components from it. Nobody seems to understand that in order for that midstream sector to exist, there has to be significant expansion on the upstream supply, and that is going to take time for people to realize. I think certainly unrelated events like the semiconductor shortage and things focus some of these companies on their supply chain more broadly, and therefore maybe start looking ahead to the metal components going into batteries. But it doesn't seem like there's a great deal of urgency, at least the sense of urgency that if I was in a role at one of those organizations that I'd have, knowing what I know here.
Just on this point of upstream supply expansion, then let's talk about the capital required. Often we hear something like 5 escondidas are needed to meet all of the copper demand that's required for the energy transition. We hear that at a lot of events that we do. John, you mentioned it earlier about the automotives looking more like they historically have done it, being more of a player in mining. Are we going to see equity stakes taken rather than just off takes from automotives, industrials, OEMs, etc.? When's this going to happen? Is it going to happen rapidly? What might be holding that back thus far?
Well, I think Tesla's already started, talking about being more aggressive on that, and I think, the general view is, Tesla is 5 to 10 years ahead of some of the larger, more traditional OEMs. I think ultimately, the capital needs to come in to advance projects, de-risk them, move them through the development cycle, and simply showing up at the end expecting to get an offtake is probably not going to be a realistic expectation for auto companies if there are their competitors that have been nurturing these companies along, building the relationships earlier on. They're either going to have a smaller offtake or no offtake, while seeing their competitor get the lion's share of it. And at the end of the and I think that as Nate was previously mentioning, people are very focused on having that security around supply. I think that if taken to where it should go, should lead auto companies to be investing more in the supply chain, seeing projects advance, because ultimately that's where the raw material is going to come from. There's certainly room for technological innovation to reduce the overall aggregate demand or bring in alternative materials, but ultimately those are going to have to come from somewhere, and technological innovation takes time.
I would just, if I can, Adam, I just jump in and echo that. I don't think most of these OEMs at the end of the day want to operate mines, right? But I think they are much more open, given some of the disruptions we've seen, whether it's what's going on in Russia, whether it's the move that we're seeing to deglobalization in many ways to protect supply chains, and get more local sourced materials. I think the interest and readiness to figure out ways to finance them with good operators is much higher. The BASFs of the world, who are going to support the VWs and the BMWs and all of those groups with, electric vehicles in their quotas. They're looking at ways to finance these types of projects and mines. They don't want to operate it, but they want the material. And I think you're going to continue to see that, because it's going to be one of the only solutions. And they know they know what the growth trajectory is here. And they're, to Mike's point, they look through the cycle for, 10 years. They want to make sure they have it. It's not like, hey, what's happening next year?
Just if I may, very quickly, sort of, just to add something in, and I have no knowledge of anything that's going on. Just to mention that, it's just something I suspect. Well, I don't reach. It's way above my pay grade. But in the 1990s, we basically closed the Defense Logistics Agency, which had accrued a number of basic metals and minerals and precious metals in case of conflict, and the Soviet Union also, when it was dismembered, sold off their strategic reserves. So I'm not talking about a case of countries being in conflict, but I am talking about I am talking about countries holding strategic reserves at the national level, and it wouldn't surprise me to see something like the DLA get reconstituted in a different form. There has been discussions in the Senate from time to time, and we all know how efficient that body is, but nonetheless. And the same thing has been raised in the EU Parliament as well, about having enough strategic metals at hand held by the government in case of supply disruptions. And that would compel them, because of the low levels right now worldwide, that would compel them to come into the market in much the same way that, an OEM might.
There was a co-investment, I think, from the US government in TechMet, some nickel project in Brazil a while back, maybe last year. So we're sort of seeing it, but is it enough? Is it too late? Perhaps if you look at sort of how advanced China is with controlling the supply chain of critical minerals, is the US government acting far too slowly? Probably, but let me put it back to the panel.
Yeah, could very well be. As I say, I have no purview into the in the sanctum sanctorum of this or any other government, but it wouldn't surprise me if there's some very fertile minds in the intelligence agencies in particular that would be thinking about this right now.
Michael, you want to say? I do have some anecdotes around this here that I think is kind of interesting, because one thing we do know in mining, or really in this kind of meme stock era, where we basically paid people, to sit at home and gave them stimulus checks, and then they went and played in the world's biggest casino, driving dog coins and things like that, to the moon. Anecdotes and these type of things, what you'll see often in these type of cycles is that there's some early adopter, maybe they get laid out. So they kind of defer other people or deter other people from trying that for a little while, but someone's brave and tries it again. And we saw, AMC, we'll see how this goes for AMC investing in Highcroft there. But there's two anecdotes that I've come across recently. I have a very good friend of mine who manages money for kind of an interesting group of people, very high net worth, but a group that's very tied into the tech scene and what's happening there. And he sent me a text the other day, and he said, "Have you guys thought about asteroid mining?" And I said, "No, absolutely not." This is something that I remember seeing in the top of the last cycle. I didn't think we were there yet.
Platinum, right?
Yeah, PGM. So he sent me this text, and someone was saying that, we've already raised $15 million. We're going to mine PGMs off an asteroid. And I said, well, we can go to Sudbury right now, and I can get you PGMs. It's, they're out there. You just got to permit the mines. It's a lot easier than going to an asteroid. So, I thought that was quite interesting. And then speaking to the defense side, I have friends that were in Nevada, and they were sitting in a barn talking about some uranium in the U.S. And a fellow comes over and said, "I heard you guys talking about uranium." And he said, "Yeah." I said, "Well, when you guys get that mine going, we want to buy it. We're from the government." And so, a lot of these things are happening already. And that's, these are indications to me that, commodities and energy metals and these ingredients to this greener economy are becoming topical. It is starting to happen, but one of the things that I've always learned in this industry is that you can't chase it. You almost have to be early. You have to be there already if you're investing. And that time will come here, and I think companies like ours, the ones that we've incubated and got ready for this, eventually will become very topical, and we'll see what's happened in cycles in the past happen again.
It's interesting your point on uranium there. What is your view that the US needs to increase uranium as a sort of baseload source if it's to reach its energy transition goals?
I think it's an important aspect to the power mix. Absolutely.
I mean, to piggyback on that a little bit, we've just seen a full 180 in Europe, right? Where they have basically, had a front row seat to the crash of the car, and by changing their energy transition to 100% renewables and taking away all their baseload power. And now what are they talking about? We're going to start building more nuclear power plants again, and they just finished shutting down a whole bunch, and they're going to come on in 2035. And you're like, so, I think those things are in motion, and there will be a spot, a renewed spot for uranium in that, and a new demand cycle. But I'm not sure that's not a counter-cyclical indicator relative to what the governments are doing.
Yep, fair enough. Okay, very good. I want to talk about China just briefly. Sort of mentioned a little bit in some of the commentary so far, but how does the panel sort of perceive China's potential economic slowdown domestically, slowdown in the property sector, etc.? How impactful is that on the metals market? And then maybe as a secondary point, China's dominance of the supply chain of rare earths and other critical minerals. Is this something that we need to constantly be aware of and fearful of, or is there more of a strategic play here around sort of potential collaboration? I think obviously lots depends on Xi's regime as a command economy, but is the perception a little bit skewed as too much of us v them, when actually we're in a very international industry anyway, with many parts along the value chain? Could I put that to the panel?
No, thanks, Adam. I think we're coming out of seeing large parts of China having shut down, and maybe perhaps some of the recent softness amidst the broader uncertainty is indicative of the the base level of demand in a weakened China scenario, and it's still a very robust environment. So I don't think barring a more severe global downturn, that weakness in China spells doom for commodities. I think the longer term trends are there and supportive. To your other question on the role of China and some of these supply chains, I think as we spent a lot of time talking this morning about the supply chain and companies focus on it, I think you are seeing groups advancing projects in areas where historically China has been a dominant player on the supply side, counting on not just robust pricing, but a strategic element of that demand going forward. And I think you'll see that particularly as people are very focused on supply chains, and that playing a role in advancing some projects. I don't think it's going to necessarily turn an uneconomic project into an economic one, but I think it's going to offer some fallback or alternative sources of funding to bring that supply online. So I think there will be a focus on the supply chain and broadening it to support things, particularly if you see recurring disruptions on a global scale, like Russia, Ukraine, or the slowdown in China.
I guess we're going down the line, right?
Yeah, let's do that.
Well, forgive me for limiting this to the precious metals, but they're a key player. They're the largest importer and consumer of all four. But Russia is also the largest producer of. China is also the largest producer of gold. And in the case of gold, the production is beginning to drop. Has been dropping, primarily because of the getting back to ESG, the enforcement of stricter environmental regulations. So she's declining in that ranking. It's still number one, but producing less. And the influence of China on the precious metals is absolutely enormous. For example, when it comes to platinum, we all talk about autocatalytic demand, but jewelry demand is only a fraction below. Once you take out recycling, jewelry demand is only a fraction below autocatalytic demand for platinum, and 75% of that comes from China, because the wedding ring is the favored, platinum is the favored wedding ring in China, and marriages have declined from 12 to 16 million a year, and last year the registrations were just 5.8 million a year, which I can only assume means Chinese women are getting increasingly smarter and more selective, but it means less jewelry demand, and so the influence is not what you would expect, and it's really quite important. Now we think marriages will go up, and that the demand for jewelry in general will rise, but it does strike me that we've got to keep a very close eye on the domestic consumption in China, because they're now playing the role that the United States did about 100 years ago as far as commodity consumption goes.
Interesting. Yep.
And I think, to add to that, I think, the last bull cycle, certainly for copper and metals that are impacted by electrification, was driven certainly by China. It was China centric. What I think is very interesting here going forward is that in order to meet the COP26 goals, the goals that basically, I suppose, non-elected governments around the world have enlisted our governments to reach here with regards to carbon offsets and carbon neutral operations. We need to build the same amount of infrastructure in terms of grids, in terms of the grid that China built in the last bull cycle. We need to do 7 times that going forward here. So China plays a very important role, certainly in precious metals. China plays a very important role in base metals, but I think this this coming bull market is much larger than that, in the sense that it's going to be driven by economies all around the world, impacting the metal and impacting the demand. Yep. And I should add to that, in a scenario where supply is becoming more difficult, and existing deposits, as I said earlier, lower grade and more expensive to mine.
Certainly. Nate, do you want to add anything on China from Osprey's perspective?
I'll be brief, but I generally agree that people want to find don't want to be held to just China as the primary supplier of a lot of these materials. So I think you're going to continue to see new resources developed outside of China of some of these, like the rare earths or lithium processing or things like that, where China is very dominant. And on the China macro side, as I said earlier, I just think there's a lot of questions here that are hard to sift through in terms, because property is better than it was, but it's not growing, and that's the biggest driver. We've got real concerns about population decline in China. That's not a tomorrow issue, but it's definitely a structural issue over the next decade. So I think you got to be very careful, given in many of these metals are the largest consumer in the world.
Excellent. I've got a lot more questions, but I want to open it to the floor if anyone's got any questions for our panel at all. Anyone want to comment on anything thus far?
Is ESG a great way to worsen the climate crisis by increasing CO2? In other words, if you make it harder to invest, let's say there's less oil and gas, so then the Chinese and the Indians are forced to buy coal, and CO2 rises. I mean, it's just a scam.
Yeah, it's sort of what we tackled at the beginning, but yes, the paradox of ESG, sort of driving capital towards hydrocarbons. I think there is that in many regions, but yeah.
That's coming.
Beyond that?
I don't, I think there's a lot of ways to look at ESG, and it's very encompassing. So it depends where you want to drill down, and there's a lot of different policies depending on where you are. Well, I don't want to debate whether it's a scam or not, because I think that's too generalistic, but it's happening, right? So we can sit here and say like, hey, we think that by these electric cars all coming onto the grid that we're really decreasing, our carbon footprint, and we're generating it with coal, right? To kind of your question or point, but like electric vehicles are happening. So I don't think, spending a whole bunch of time debating it. Everybody, the commitment from the Western world, to a lesser commitment, the commitment from China, you can say, yeah, Chinese coal production's up 12%. Well, they had an energy crisis, right? They're not going to let their people, freeze to death. So I think China is generally committed to reducing their carbon footprint, but not at the expense of people dying.
Okay, I want to ask, where's the panel now in terms of opportunity with investing within the sector? You're investing or advising on investments. Within the mining tiers, the majors are obviously printing cash right now at these prices. Where's the value? Are the juniors performing as well as you would like? Is there a real issue around sort of quality of assets? How do you look at making investments at the moment? Let's just quickly go through that.
Yeah, I think obviously paying attention to the fundamentals of the assets is something that can't change, and where we try to look for opportunities is where there's a dislocation between the value of the asset and where the current price is, and that can exist for very opportunistic reasons, or if it's just a fundamentally there's a misunderstanding of the asset, and that's something where we try to deploy capital on a trend basis, is opportunistically into the sector, in addition to our primary project financing strategies.
James, are you advising your internal clients and investors and equities guys at HSBC? Is it all buy? Is it equities? Is it bullion? Is it?
Well, we advise them to trade with HSBC at all costs, but I'm not on the equity side of it. But what I can tell you is that our long-term forecasts are very positive on silver and positive on platinum within the precious metals space. We are looking for platinum to get back to a premium to palladium as the decade unfolds because of hydrogen and because of substitution and because of limited supply compared to what we expect to be more abundant palladium supply later in the decade. And also for the industrial demand, which is extremely varied for both platinum and silver, but especially for silver, led by solar power, but also many environmental things as well. So it's really, and just echoing John's point, just the permitting process alone would tell you that there's going to be some supply issues going forward. So while I don't make recommendations sector-wide, like for mining, what I can tell you is I like those two metals in our published research, and as a consequence, I think they're good things to have.
Yeah, very good. Michael, you sort of revealed your investment approach earlier, but do you want to opine on that?
I think I owe you for the setup, because that was a fantastic setup for what I was going to say here. One of the other
resumes in the mail.
Exactly. The envelopes over. No, we, part of the reason why we're here, Inventa's here, and I wear another hat, which is I was the founder and CEO of, I am the founder and CEO of Vizsla Silver, and we're opening the New York Stock Exchange on Thursday this week here. So silver, I believe, is an incredible opportunity for investment right now, due to that, exactly what you mentioned there, and certainly, going back to that deeper and lower grade, a lot of the silver produced is from byproducts of those porphyries as well. So we believe the setup for silver is just fantastic. We have extremely high grade, large scale district that we're moving towards production in a brownfield camp in Mexico called Vizsla Silver. So we allocate our capital there. That's our number one investment. But when it comes to our criteria and what we're looking at, for us, it has to be the size of the prize, the cost of the test, and the chance of success. So we look for projects where the discovery has been made or the team is there, and then we get very involved with our own capital at first, and also in helping advise and invest in management teams, and we drive companies forward on that commodity thesis or project thesis. So we'll have something very exciting in copper to talk about soon. We can't talk about it right now, but we do have an interesting company called Tin One that is part of this thesis, and we believe that tin is a metal that's really investable right now. We're offering basically one of the best ways in North America to play that with Tin One.
Excellent, very interesting. And Nate, we've got about a minute. Do you want to just take us home with your approach on, where's the value investing in this market at the moment?
Yeah, I think not too dissimilar to what a lot of my peers on the panel said, and what we've talked about before. Places where there's outsized structural demand growth, which centers largely around ESG and energy transition. And then I think the other theme that is pretty compelling is, Western world security of supply. And so when you can get high quality assets and teams to do that, those are compelling opportunities, or three kind of pillars of it.
So let's have a round of applause for our panel. Thank you.